Good morning. This is Robert Sinn. Many of you know me on CEO.ca as Goldfinger. Some of you know me on Twitter as @CEO Technician. I'm a pretty regular blogger on precious metals, junior mining, and even just broader market themes. Once again, it is a pleasure to be speaking at the Metals Investor Forum. And you can see the title of my presentation, Seasonal Tendencies in Junior Mining, Is the PDAC Curse Real? So kind of apropos because we're heading into PDAC week. But this presentation is also about three primary seasonal tendencies in junior mining, not just PDAC. And I finish off with a few stock ideas that I think are worth taking a look at. So let's get right into it. Obviously, your forward-looking statements. I will be making forward-looking statements. Please do your own due diligence. It's your money and responsibility. This is not investment advice, just considered to be for entertainment and educational purposes. And the stocks I talk about at the end, you can assume I own all of them and I may sell them at some point in the future. So, seasonal patterns in junior mining. There are quite a few seasonal patterns. And when you start to really understand how the sector works, you will understand these patterns even better and more intimately, and maybe even be able to time a few of them. So, the three that really stand out, and I've been investing in the sector for 20 years, so I've seen this play out many, many times, and these patterns are definitely pronounced, and they definitely work more often than they don't. So the first one is tax loss selling season. So end of year tax loss selling usually starts maybe at the end of October, early November, and it can last all the way up to Christmas. So the end of year tax loss selling, you never know exactly which day it's going to finish on, but usually the day before Christmas or the day after Christmas are pretty good bets for when finally the sellers are exhausted and there's really no tax loss selling left. And then you can often get a lift in the final days of a year, final days of a calendar year, and that will last well into January and sometimes all the way through the end of January. So you get this capitulation low and then a 5 to 6 week rally. Another one is the summer seasonal tailwinds for far northern explorers. So companies that might be exploring the Golden Triangle, the Yukon, the Northwest Territories, usually they put in a bottom around April or May each year, and then they proceed to rally for the next 4 to 5 months. And then finally, the PDAC Curse. So there's a very strong tendency for stocks to decline after the beginning of PDAC. So, PDAC starts, let's say, on a Monday. I know it's Sunday night, but Monday, the first Monday in March, and you can pretty much gauge it for the next month, back test that, and the results are quite striking. The tendency is for junior mining and gold stocks to fall over that following month after the beginning of PDAC. It's not 100%, nothing is 100%, but more often than not, there definitely are headwinds after PDAC. So let's begin with the first seasonal pattern, end of year tax loss capitulation. Remember that very often investors are doing tax planning in Q4 of each year. So their accountants are starting to get their tax documents ready, and they're starting to look at what their taxable liabilities are and then how they can reduce that taxable liability. The simplest way to do that is to sell holding stock positions that you have a loss in, and maybe you just don't think anything's going to turn around in these stocks in the near future. You can buy it back after 31 days and not be a wash trade. So tax loss harvesting can often exacerbate selling pressure, especially during down years. So 2022 was a great example. Everybody said, well, tax loss selling is done in October. No, I mean, It got worse in November. And actually, really, the sector didn't lift until the day after Boxing Day. So really, we're talking about the final week of the year. That's how bad the tax loss selling was, and how bad of a year 2022 was overall for the sector. We saw another example like this in 2018. So the TSX Venture, not a perfect way to gauge the junior mining sector by any means, but it's generally the best we have, was down about 30% year to date, heading into the final 2 weeks of 2018. And venture listed stocks staged a powerful rally during the final days of 2018. And as I mentioned, we saw a very similar pattern last year in 2022, where actually down about 35% heading into Christmas, and then a pretty nice sharp rally from when markets reopened after Boxing Day all the way through the end of January. We won't talk about what happened in February. That's not the point of this presentation. But the track record for buying the day before Christmas and holding through the end of the following January has produced an average return of 5.5% using the TSXV since 2012. So 10 out of the last 12 instances were positive for an average return of over 5%. That's a pretty strong tendency. And here you can see this is 2018. So obviously November all the way till Christmas, pretty much straight down for the venture, down for the juniors, ugly, ugly, ugly. But once we got to Christmas, look at that rally. That's a very, very nice rebound. So, the key here is to understand that there's a few things at work. One is by Christmas, usually anybody who was planning to tax loss sell has tax loss sold. So just the supply and the selling pressure has lifted off the sector. And number two, you get a little holiday optimism, and then the change into a new year definitely usually brings some new buying. The whole, this year's going to be different. Companies might start to put out news in early January. There's something to look forward to. Whereas in the final weeks of a bad year like 2018 and 2022, most people were just waiting to turn the page to January, right? So there was no urgency to buy during this, downtrend, this very clear downtrend. And then this is 2022 to 2023. Not as pronounced as 2018, but still pretty significant. And you can see that, from September, you had a market that was making lower highs, right? So here's a lower high, here's a lower high, here's a lower high. And finally that snapped, but it took until January of the new year for that to happen. And the simple way to explain this is that this is just too much selling pressure is just ready to sell into these little bounces. There's too much, supply of shares still available. So you get lower highs, you get lower lows before you eventually get the capitulation washout over here. So we'll call it the Santa rally. We have tax loss silly season that then leads to the Santa rally. Usually the day before Christmas is a good assumption as where the Santa rally starts, all the way through the last day of January. And when I say this, I'm only referring to the junior mining sector. I'm not talking about the S&P 500, the broader market, but you can see the results for the Santa rally are pretty strong. 2021 into 2022 was the worst example of this, but obviously we know that January 2022, everything was peaking and rolling over across all markets, across all sectors, right? So this seasonal tendency is not going to trump a big macro inflection point like January 2022, right? And then 2015, 2016 over here, well, January 2016 was just an awful month. And it was also proved to be a capitulation low and a major buying opportunity. So This time frame was also a very uh, a period of time when there were a lot of macro cross currents. So all these other examples obviously worked very well. So the seasonal pattern is strong, but nothing works all the time. And the big macro turning points are obviously going to trump any seasonal tendency. And then the summer tailwinds for explorers. This one's a little bit harder to quantify, but it makes sense. And I've seen it play out time and time again, year after year. But basically, most companies finish financing by April or early May. And so they're fully funded. So that financing pressure is off of them at that point. And investors start to look forward to summer programs. So most companies are going to go out to drill, they're going to do field work, and there'll be anticipation of news flow and the potential for new discoveries, right? And so this lull in news during February, March, and April often creates a buying opportunity. Obviously, in combination with the fact that very often investors are looking for a financing, they're waiting for a financing to come, and then looking to buy after that financing is out of the way. So this helps to create that seasonal tendency. But obviously, the biggest part of it is just simply uh, there's big exploration programs being carried out from June through October each year in the Yukon, in the Golden Triangle, in the Northwest Territories, right? So that's sort of a no-brainer seasonality period of strong seasonality. But then we have to look at the flip side because the tailwinds can turn into headwinds after Labor Day. If companies haven't announced great news by early September, very often investors are going to begin selling and not wanting to wait around for results to come in over the next 3 or 4 months. They assume if there's something great to announce in the market, it would be out already. Here's an example, Banyan Gold, of this seasonal trade. So 2019, Banyan was way under the radar still, not many people paying attention to it. And you can see in late May, it put in a bottom at 3.5 cents and then proceeded to move up to 6 cents by September. So some people say, well, that's only 2 cents, but no, 3.5 cents to 6 cents is more than 60% gain. So that's a very significant move still. And absolutely, you could have bought a couple 100,000 shares, maybe even more at 3.5 cents, and then made that trade. And you can see that actually by the end of 2019, we're all the way up to 8 cents. So more than a double off that seasonal May low. And then obviously 2020 was an exceptional year, not one to sort of a one of a kind year, but double bottom in March again at 3.5 cents. And look at the roaring rip rally it had for the next 5 months all the way to August. So that was a more than 10x move in 5 months. Again, past performance is not indicative of future results. 2020 was an exceptional year, but the seasonal tendency speaks for itself on this chart. And then I'll note September started to correct. We started to get a pretty big correction there from Banyan, from 39 cents to 27 cents there at the end of 2020. So the seasonal patterns can go both ways. Skeena Resources, there's your March low, your seasonal low, rally, and then a higher low in May, and then a higher high put in August, and then it began to roll over after Labor Day. So sometimes these seasonal patterns work really well. I mean, like clockwork sometimes. Of course, nothing is 100%, and specific company news will often trump these seasonal patterns if it is really big news, either good or bad. But one should not ignore the seasonality of Golden Triangle and Yukon companies. Benchmark, another Golden Triangle Explorer. Here's your April seasonal low with very sharp rallies higher off that low. And you can see it continued to make higher lows and higher highs throughout 2019. So the seasonal low in late April was at about 17 cents a share. By the end of 2020 or of 2019, it was almost 50 cents a share. So very, very powerful seasonal trade was available there in benchmark. The PDAC curse. So the purpose of the presentation really, sort of the hook, is it real? Is the PDAC curse real? The answer is yes, it is real. I'm sorry to bring the bad news, but looking back, using 12 years to keep it concise and to the point, but you can back test this out 20, 30 years, and the seasonal tendency of PDAC week to mark the beginning of some weakness in the junior mining sector is very strong. So just since 2011, we have an average of a 2% loss during PDAC week for the TSXV, and then 0.6% for the GDXJ. So not huge, but pretty clear red trend during PDAC week. Now, if we expand that out to a 1 month time frame starting the Friday market close before PDAC, we get a roughly 5.5% average decline for both the TSXV and the GDXJ. So again, even more pronounced. So March is generally not a great month for precious metals and mining stocks. So that helps to explain part of the so-called PDAC curse. But also, companies are often putting out expectations of news during PDAC week. So investors are holding, buying in anticipation of news during PDAC week. And then there's this very strong tendency for there to be selling on the news. The news has to be above expectations, well above expectations, for there not to be selling on news. So there is this natural tendency to sell on the news. And then obviously part of the whole PDAC experience is fundraising. Companies are looking to do financings to fund their summer exploration programs. And that's actually honestly part of the timing of PDAC being in early March, so they can raise the funds and get ready for their exploration program starting in May and June. So put it all together, the PDAC curse is real. The PDAC curse has actually been really real 2020, 2021, and 2022. We know that 2020 was a unique year, obviously, and then things turned around very soon thereafter, a few weeks after PDAC. But I wonder, given how bad the month of February was last month, if lowered expectations and really oversold charts could help to reverse the PDAC curse in 2023. It could be different this time, folks. Who knows? But I am much less focused on a little more near-term downside in share prices and much more focused on buying opportunities setting up for March and April. So I'm looking at companies with strong catalysts and beaten down share prices that could buck the PDAC curse. So hopefully company-specific news flow and valuation will trump any sector headwinds. So I've chosen 3: Aztec, AZT on the TSXV, Outcrop, OCG on the TSXV, and VGCX, which is Victoria Gold on the TSX. So 2 explorers, 1 producer. I'm just going to keep it short and sweet. Aztec just completed a $1.1 million financing at 25 cents with no warrants and no finder's fees. So the company is well funded. They have begun a core drill program at their Tombstone project in Arizona, about 2,500 meters of core drilling, focusing on expanding the near surface gold and silver zones with depth and strike length. So stepping out from known areas and getting ready to put together a resource 43101 for Tombstone in 2023. CEO Simon Diakowski is targeting 1 million gold equivalent ounces in resource this year. And then you have these deeper CRD targets that offer some tantalizing pie in the sky, but they won't be drilled during this program because that's not the objective of this program. Outcrop Silver and Gold, a company that I had the opportunity to visit in Colombia a few weeks ago. Big catalyst coming here. Maiden resource for the Santa Ana Silver primary project is coming. expecting about 50 million silver equivalent ounces at an average grade of about 750 grams per ton silver equivalent. This is an impressive project.